Your stories.
Your freedom.
The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. A lot to talk about on this Tuesday. Of course, we're going to dissect Rick Perry's new supposedly flat tax. There's a lot of good stuff in the Rick Perry plan. Unfortunately, it blows a hole in the deficit a mile wide. We're going to get into the details of the Rick Perry plan, which he announced today, and also he debuted it with a op-ed piece in this morning's Wall Street Journal. So we're going to get to that up next. First, I want to talk a little bit of what's been going on in the markets. You know, the Dow Jones is off to a weak start. We're down 140 points today. The catalyst, I think, is some bad earnings news and economic data coming out. Overnight, the markets were higher. In fact, this morning, before 3M came out with its earnings, the S&P futures were up about 8 points. S&P is now down 15.5 points. 3M disappointed the street with weaker than expected earnings. It's a major industrial company, a Dow stock. Again, I'm talking about stocks here. I'm not allowed to make any investment recommendations on this program. You can thank the security regulators for that. So if I mention a stock, I'm not saying I'd like it, I don't like it. I'm just talking about it because it's in the news. 3M down 5.5% today. That's a big drag on the Dow. Also, look at some of these stocks. Netflix, analysts coming out with negative comments on Netflix. I talked about Netflix on this show before as an example of how quickly, a bubble can burst in a stock. Netflix today down 36% to 75. That's down. It's down $43 in one day. That's 36%. Look at an example of what can happen. Netflix was over $300 a share in July. In July, at 300, the stock has dropped from 300 to 75, and it's falling like a stone. This just shows you what can happen. Now, remember, Netflix shares were at $20 in December of 2008. So they went from $20 to $300. That's what? A 15-fold increase. And the air is coming out of the bubble very quickly as speculators rush for the exits. It just shows you how quickly this kind of stuff can turn. I think one of the big news, before I go to that, we got consumer confidence that came out today. I'm reading the Bloomberg headline. U.S. consumer confidence unexpectedly drops to two-year low. Whenever we get bad news, it is always prefaced with the word unexpectedly. I talk about this all the time. When are the experts going to start expecting bad news? Now, the consumer confidence number dropped to 39.8 from 46.4. This is the lowest number of consumer confidence since March of 2009. That is the month that the stock market was at the absolute low. So that was the height of the recession that we had, or the collapse in the market, and consumers' confidence is all the way back down to that level. What does that tell you about the economy? And again, I want consumers to be less confident because I want them saving, which is what they need to do. Of course, Wall Street wants them to be reckless and spend. But the reason they're so negative is because the economy is a lot weaker than people think. One of the news I want to talk about is the oil price, which oil is coming off its high right now. Oil's only up about $1.50 a barrel today. It's trading at around $92.75. We were up $4 yesterday in the price of crude. We were up over $3 again this morning until the bad news sold off the stock market. Think about that. Oil prices now, based on where they were earlier this morning, were up 19%. 19% in the month of October. And the month of October ain't even over. Now, I've been talking on this show about how I thought oil prices would go back above 90 and then they would go to 100. We are headed there pretty quickly. But listen to this story. I've got a story up here. Let me see. I think this is in Bloomberg. Let me find it. It's up on my computer here somewhere. This is a story at Bloomberg. This is from today. This is today. It's online, Bloomberg's website today. Inflation peaking in the U.S. as commodity prices tumble. Commodity prices tumble? What are they talking about? So if you read through this article, it says the biggest rout in commodities since the global recession may be a sign that the fastest U.S. inflation in 3 years is peaking. It says the Standard & Poor's index of 24 commodities entered a bear market last month. Last month now. They're talking about September, after sliding more than 20% from a two-year high. So what they're saying is inflation might have peaked because we had a big sell-off in commodities in September. And that's true. Oil prices were down 11% in September, and oil prices are the biggest component of that commodity index. So you did have a big drop in oil prices in September. But who cares? We're almost finished with October. What happened to oil prices in October? They're up 19%. In fact, they're higher than they were before the September sell-off began. I mean, could you talk about propaganda? Trying to say that inflation is peaking because commodity prices tumbled. Meanwhile, that decline has already been eradicated. In fact, oil prices are higher than they were before the sell-off began. I mean, how clueless could people be? I mean, you read this news stories, it really just reads like, just pure propaganda that people are saying that inflation is under control. And I was pointing this out at the time when a lot of politicians, a lot of people on Wall Street were saying, hey, look, oil prices are down. That's going to help the consumer. I pointed out that they were only down because the stock market was down, and that eventually we would get a bounce of the stock market and oil prices would go up even higher. And that is exactly what has happened. And I think based on where we are right now, I still think that we're going to go through $100 a barrel, maybe by the end of the year, and then we're going to go higher than that. I mean, the high that we got in oil prices was $115 a barrel in November. And it's not just oil prices. It's the whole energy complex that's going up. Look at the price of heating oil. Heating oil prices are way up off their lows. I mean, heating oil, if you look at where, because we're coming into the winter, back in early October, heating oil was $2.70, and now it's back above $3. It's moving up fast. I think by the time winter comes along, you're going to see heating oil prices considerably higher. And if you look at where they would have been, last winter, back in 2010, heating oil prices were about, like 30% lower. I think you're going to see maybe even a 50% increase in the cost of heating oil for winter 2012 versus winter 2011. That's a pretty big move up. I think that's 2011, or is that? 2011, 2000. Oh no, excuse me. I'm looking at 2010. So that's above 2010 levels. 2011 heating oil prices were higher. They're going to be higher in 2012, but not by as much a percentage. But all of this is adding to the problems for American consumers who are getting clobbered by a rising cost of living. And everybody wants to deny that is happening on Wall Street and in the government. Anyway, when we get back, we're going to talk in depth about the Rick Perry plan, the new tax plan just announced today. There's a lot of goodies in the plan, but it's got one glaring problem, and we will talk about that when we get back. Stick around. This is Peter Schiff on SchiffRadio.com. And we are back. This is Peter Schiff here at SchiffRadio.com. In the last 15 minutes, gold has risen by better than $20, almost $25 an ounce. We were negative. Now we are positive. We're getting a big run in the price of gold and silver, even as the Dow Jones is still down close to 100 points, but off of its lows. Oil prices, again, moving back higher, up more than $2 a barrel on the day. In the currency market, I think the bigger news is a new record low in the U.S. dollar versus the Japanese yen, as we are now trading with a 75 handle on the dollar yen. The dollar, however, is doing better against all the other currencies. The only currency it is down against is the yen, although my gut is that's going to change. I think the dollar is going to continue to fall, especially if we get a rebound here in the stock market, where it looks to me we may be turning the quarter. Maybe gold is leading the way higher, now up $25 an ounce. This is a fast market as people are rushing to buy the yellow metal. The gold stocks have also turned positive on the day. They were down quite a bit earlier this morning. They have rallied. The Huey Index has rallied substantially just in the last 15, 20 minutes. The index has risen from 527 to 541. That is a huge move in just a short period of time. Anyway, let me go and talk about the Rick Perry plan. First of all, I think maybe one of the best ways to describe his plan right now is an alternative maximum tax, right? He eliminates the alternative minimum tax, but basically introduces an alternative maximum tax that I think is going to blow a hole in the deficit, despite the fact that he promises a balanced budget by 2020, and he promises to cap government spending at 18% of GDP I don't see how that happens with all the tax cuts that the plan has. Let's go over it. First of all, he proposes that we keep the entire tax code as is, and everybody gets to calculate their taxes using the current code. Then they can calculate their taxes using his alternative code, and they pick whichever's lower. The alternative code imposes a top rate or a flat rate on everybody of 20%, although he also increases the personal exemption up to $12,500, which will mean that under the Rick Perry plan, a higher percentage of Americans than currently pay no income taxes will pay no income taxes. So he takes even more people off of the tax rolls than we have today. But the new plan has a 20% flat rate, although it's not totally flat, because if your income is under $500,000, you still can deduct your mortgage interest, your local property taxes, and your charitable deductions. So not really that flat, but you get to deduct that. You don't have to pay any taxes on capital gains or qualified dividends. The tax is zero. So you get to calculate your tax under this alternative structure. And if it's higher than, if it's lower rather than what you get under the current structure, then you just use the alternative maximum tax rate of 20%. So under this plan, nobody gets a tax increase. Either your taxes remain the same or your taxes get cut. And in many cases, the tax cut is significant. For somebody like me, my taxes are significantly reduced. I mean, significantly, more than 50% reduction in my taxes. And a lot of people are going to have big cuts in their taxes. The problem is nobody has a tax hike to offset that, and that is a big problem. Now, in addition, Rick Perry also eliminates all taxes on Social Security benefits. Hey, that's a great deal. That amounts to an increase in Social Security benefits. It's the opposite of what we need. He has talked about Social Security being a Ponzi scheme, yet what does he want to do? He wants to increase Social Security benefits, because the Social Security tax was a way of kind of means testing, although it wasn't the best way of doing it, but it was a sort of way of means testing benefits and reducing them somewhat without officially cutting them. This restores the full Social Security benefit to everybody, which means he makes the Ponzi scheme worse, because now there's more money going out. To make it even worse, his plan also lets younger workers and I think state workers opt out of Social Security. So in other words, he's increasing benefits, yet reducing the number of people who are paying in to provide those benefits. So that's a huge increase in the deficit. He also wants to have a one-time reduction in a repatriation tax, letting corporations repatriate their overseas income and just pay a tax of 5.25%. Although ultimately what Rick Perry says he wants to do is eliminate all taxation on foreign income, which I think is a great idea. I mean, America is one of the only countries in the world to tax its citizens on their global income. So if an American citizen goes to Australia and works and earns money, the U.S. government says you got to pay U.S. income taxes. But if an Australian goes to America, the Australian government doesn't tax them at all on the money they earn in America. Same thing on overseas investments. If you're an Australian and you have investment income in another country, no tax. But in America, there's a tax. So he wants to abolish that, which is a great thing. I mean, all the stuff that he wants to do on lowering taxes, it's all good stuff. The problem is, how are we going to pay for all these lower taxes? If we simply have huge deficits to pay for it, then it's actually going to backfire. Now, Rick Perry is saying, no, I'm going to balance the budget. Well, then what government programs are you going to eliminate? How do we have any credibility if you don't identify what you're going to cut? In fact, his plan actually increases Social Security payments. So not only does he not address the entitlement problem, his plan actually makes the entitlement problem worse by increasing the Social Security benefits and reducing the taxes that are funding current retirees. So where is his plan? How is he going to pay for all this stuff? That's what I want to know. Anyway, I'm going to see if I can take a couple of phone calls. I don't know if anybody else has any reaction to this particular plan, but I'll go to the phones. First up is Ash calling from Raleigh, North Carolina.
Hey, Peter. Thanks for taking my call. To go back to the 999 plan with Robert Wenzel, that was a really good interview in my opinion. You had very clear thought and really put Robert Wenzel back on his heels. I was wondering what you took from that interview and why did it seem that Robert was so unfocused and seemed to be very unprepared for an interview when his blog title is economicpolicyjournal.com, when it didn't seem like he had any type of economic policy thought to fund.
Well, according to Robert Wenzel, all of his pearls of wisdom were spoken while I had my finger on the mute button. So apparently he had a lot of great things to say, but he says I muted them out. Of course, that's not the case. I gave him plenty of opportunity to say something. The problem was he didn't. I think his real problem was he was criticizing my lukewarm support of the 999 plan, because, of course, I'm not in favor of the plan. I like the idea, although I do think it's better than the current plan, right? I think it's better than what we got now. But his criticism was, well, it's not perfect. He's saying since the 999 plan is not perfect, that we shouldn't say anything good about it. Or in general, since he says that a national sales tax is not perfect, that we shouldn't support it. And, of course, that's not the argument. The argument is not whether a national sales tax is the perfect form of taxation, nor is the argument about whether or not we have no taxes right now and should we add a national sales tax. He took me to task on his website because I prefer a sales tax to an income tax. Well, let's have that debate. He didn't even want to have that debate because he wouldn't even address it. Because I think it's I think it's ridiculous to try to say that you're a free market guy, yet you prefer the current income tax to a national sales tax. I mean, I don't see any viable defense of the current income tax code. Yet, that's apparently what he was supposed to do, and he didn't do it.
And he gets regarded highly from all sorts of people. Ron Paul, Tom Woods, Lou Rockwell. I couldn't believe the interview. I was just really disappointed. But thank you, Peter.
Yeah, and my disappointment is, look, if he really thought he didn't have a fair shake, he could have said something to my producer. He could have said something to me. I'd have had him on if there was something he really thought he wanted to say and he didn't have a chance to say it. But instead, all he does is whine about it on his website and accuse me of muting him. Anyway, we'll be right back. The guest's not coming on until the top of the next hour, so we'll be taking plenty of phone calls here on the Peter Schiff Show at SchiffRadio.com.
And if the U.S. dollar does tank like he predicts, how is that going to affect that? And I had a second question.
It means the price of silver is going to go up if the dollar tanks, the U.S. dollar. Obviously, you're a Canadian. The price of silver will not go up as much in Canadian dollars if the Canadian dollar doesn't tank or doesn't tank as much as the U.S. dollar. But it still doesn't matter. I mean, gold is gold no matter where in the world you own it. But obviously, if you're living in a country whose currency is weaker, then owning gold is even more important than for somebody who's living in a country where the currency is not as weak.
Okay, so you think that even though the U.S. dollar will go down, silver and gold will go up even more so, and an investor could make a profit?
Well, I think that gold will not go up as much in Canadian dollars as it will in terms of U.S. dollars, because I believe that the U.S. dollar will lose value relative to Canadian dollars. But I believe that both the U.S. dollar and the Canadian dollars will lose value in terms of gold. So you are, in my opinion, you will see a gain from a Canadian perspective. You will see the Canadian dollar price of silver rise. I just think that you won't see as big a rise as somebody who's looking at it from a U.S. dollar perspective. But it doesn't mean that you don't do it.
Okay. The second question I had was to do with natural gas. Here in the news, we've had regulators approve 2 companies for potential shipment of liquefied natural gas to Asia. And I know that the oil sands here in Alberta are very energy intensive, and right now they're using tremendous amounts of natural gas to make oil from the oil sands. So I'm wondering what you think might happen, because I think the natural gas in Asia is trading for $14, and here in North America it's trading for around $4. So there's a tremendous price discrepancy.
Yeah, I mean, obviously, to the extent that we can come up with a way to transport that natural gas from the North American market to the Asian market, that is going to happen, and that is going to push the price of natural gas up dramatically here in North America based on that differential. You know, obviously, so because you're always going to have the shipment cost, but it's going to mean more of our domestically produced natural gas is able to be delivered to the Asian market, which means less natural gas here. Now, of course, domestic production will likely increase based on the ability to access that market. But I think that natural gas prices are going to rise in North America quite a bit, and all energy prices are going to rise here. I mean, that's just part of the consequence of what's going on. But you can see crude oil leading the charge, you know, today where you're looking at crude oil prices around $93 a barrel right now, actually $94 a barrel. We're up $2.78 on the day.
Oh, wow.
That's on top of yesterday's $4 gain.
Right.
So these are strong markets. I just read this article earlier today. You've got these fools that are talking about the big drop in commodities in the month of September, thinking that shows that inflation is over, yet they ignore the bigger gain in commodity prices in the month that we're already in. Anybody who thinks inflation is peaked is smoking something.
Right. Well, thank you very much. You and
right.
Jim Rogers are people I closely follow, and thank you for your time.
Sure. Thank you for the call. Next up is Sean calling from Seattle, Washington. Sean, welcome to the show.
Hey, Peter, can you hear me?
Yeah.
Hey, I just wanted to say you do a great job at pointing out the inefficiencies of a government system and how that takes away from the growth of the economy. But one thing I think I see a lot of people in the private industry obviously criticizing the public industry, but I don't think they get enough inside view from the actual people in the public industry. We see the inefficiencies. Like, for example, the taxpayers paid for me to get an electrical engineering bachelor's degree, and now they're going to send me for a master's degree in electrical engineering, and I'm working a government job basically not doing anything to do with electrical engineering. It's basically an unproductive job. And I think there's not enough out there of actually getting the stories of the public industry workers and some of the stuff. You know, I've seen some crazy stuff going on in Afghanistan, and I don't think they realize the depth of the problem and how much money is being wasted. Or what do you have?
Well, of course they don't. I mean, the government, whatever the government spends, it's going to waste. That is the problem. That's why we want the government to spend as little as possible, so that we can have as an efficient, as productive, and a growing economy as possible. You know, I want to make one point. Somebody emailed me, and they had an accurate point when I said yesterday that income taxes don't affect prices because when you're maximizing your income, it doesn't affect the price you charge. And I still stand by that for the short run. But he pointed out, my emailer, when you tax profits, you diminish the ability of companies to make investments, capital investments for the future, which is correct. So the more we tax corporations today, the less money they have to make the investments of the future that would serve to reduce prices. So in the long run, yes, higher corporate taxes could lead to a higher price structure because corporate taxes deprive corporations of the money they need to expand their production and to bring down future prices. But on immediate prices, they don't have the effect. But yes, and that's the reason why we want government to be as small as possible, because we want to be able to pay for it without destroying the economy. And there are some things the government can do to help. I mean, certainly if we have police, that we have contracts that are being protected by a court system, if people feel that their hard work isn't going to be stolen because they're confident in the protections that government provides, then government is a force for good. But if the bad outweighs the good, and I think today, you have a lot more bad things going on than good, it's not a force of good. It's evil, and it's making the economy poor.
Absolutely. One more question for you. Right now, I think the public, you got a major infrastructure behind Ron Paul and behind kind of a libertarian movement. He's doing a great job educating people, and I think maybe, 10, 15 years from now, he's going to have a more vibrant version of himself based on all his lectures and everything he's done at colleges. But do you think with the apparatus, him going on the Republican Party right now, do you think this is a critical juncture on whether he actually tries to convince the Republican Party to go his way and all their investors, or if he takes this apparatus and moves on? Because, I mean, if you have a large apparatus and a winning message, like I think the Libertarian Republican is going to have, then and if they can actually break off that Ron Paul.
Yeah, I don't know if Ron Paul will be able to take his 10%. He seems like he's got about 10% of the Republican Party, and of course some of those Republicans may have been libertarians or independents that joined the Republican Party simply to support Ron Paul. But if he were to take that 10% and try to transition it to a third party like the Libertarian Party, I don't know that he would take the entire 10%. I think he would lose some of it. But I don't know. I mean, is it big enough to really challenge the two-party duopoly, or is it better to work within the Republican Party to try to take that 10% and grow it? Because it is a pretty good base with which to build on. Anyway, we'll be back. We've got a commercial break. We'll be right back with more of the Peter Schiff Show on SchiffRadio.com. Welcome back, everybody. It's Peter Schiff here at SchiffRadio.com. Before I go back to the phones, I want to, talk a little bit about this fiasco or controversy going on with Fisker Automotive, which is an American car company that received $529 million loan from the U.S. government to manufacture its electric car, the Karma, in Finland. Now, it's not even making the cars in the United States. It's making them in Finland with our money. Why the U.S. government is loaning money to a private business to manufacture cars in another country makes absolutely no sense. Of course, it's completely unconstitutional. If Americans want to invest in this company, they have plenty of opportunities to do so. In fact, there are some Americans who are investing in it. One of them is Al Gore's company. Al Gore has a financial interest in this firm and obviously was able to use his clout in Washington to lobby for a boondoggle for himself at the expense of the American public. But first of all, let's take a listen to how the government, this is Vice President Biden speaking about this whole deal. Listen to this this is cut number 4.
To the gasoline engine, there has never been such a big change as is happening right now, where we are moving from the pure gasoline engine into the electrification of the automobile, plug-in hybrids, for instance, like we're going to be building right here in this plant.
I don't know. That doesn't sound like what I thought it was going to be, but I know it's something about the Fisker plant. I think they were talking about building cars in an American plant. Of course, that never happened. They ended up building the car entirely in a Finnish plant. But let me see what I get from cut number 5.
He's had a change. Change because the plant closed. Not because of anything you did, but through no fault of your own. The plant closed. And the fact of the matter is, that difficult journey, was one that today we're beginning and hopefully going to end. The workers here have always been the best. And Mr. Fisker, I want you to know that they're going to prove once again for you that they are the best in the world. And that's a fact.
So in other words, the first cut is the President Henry Fisker talking about how we're going to expand this plant and we're going to build all these cars at this plant. And then the second clip was Al Gore apologizing to the workers at that plant because the plant is going to close, even though they got a $529 billion loan, $529 million. Excuse me. I don't know why I keep saying billion. Every time I think about the government, it's in terms of billion, but this is a $529 million loan from the U.S. government. Of course, once the company got the loan, they quickly shut down the American plant. And, of course, when Gore says, hey, it's being shut down through no fault of your own, what he should point out is that the fault is the U.S. government's fault. That's why all plants are shutting down in many cases, although sometimes it is some of the faults of the unionized workers who are artificially driving up their wage costs beyond the ability of the company to pay. But here's the real kicker on these cars that are going to be built with taxpayer money in Finland. Right? The cars that they're building, this Karma, is going to retail for about $90,000. $90,000. So these are cars for the rich, right? No middle-class Americans are going to buy any of these cars, and no middle-class Americans are making any of these cars. And get this, the miles to gallon, these cars are going to get 19 miles to the gallon. I mean, there are SUVs that get better than 19 miles to the gallon. So how is this green energy? 19 miles to the gallon. So in other words, not Al Gore. Al Gore is benefiting, but the U.S. government, Barack Obama and Joe Biden, took $529 million taxpayer dollars so that some American venture capital guys, including Al Gore, can make gas guzzlers for rich people over in Finland. This is your government at work. And this is why I'm saying we got to minimize the government's involvement in the economy. We got to cut all this stuff out because the government is going to continue to undermine our economy. And here they do it for the specific financial benefit of Al Gore and his friends. Anyway, let's go back to the phones. Dan is calling from Springfield, Virginia. Dan, you're on.
How you doing, Peter?
Good.
All right. Let me just say, before I ask my question, when you were in testifying in front of Congress, I tried to make it to the hearing, but I ended up going to the wrong one. So you would have had it.
Yeah, there weren't that many people in the audience, so you would have had plenty of room to sit.
Yeah, I went to one that had a line, and I thought it was because you were there, but it was the super committee. But anyway, I just got out of the Navy recently, and I am the world's kind of my oyster. I have GI Bill. I can go to school. I already have a bachelor's, but it's kind of useless liberal arts degree. And I was wondering what your opinion was with kind of somewhere to get in that would be lucrative in the near future. I considered the world of finance, but I get the impression that's not where I really want to be headed.
Well, I don't know. I mean, what are your interests? It's hard for me to tell you.
I'll tell you, I can do anything. Math, engineering. I was actually in engineering in the Navy, in the nuclear field.
I think that a lot of the opportunities are going to be abroad if we don't do the right thing. So it's a good idea to maybe learn another language, and you have more opportunities in Asia than you will have here. But if we turn around and we're going to move more towards a real economy that's manufacturing and producing, then there's going to be a lot of opportunity in real industry, not just on Wall Street, pushing paper around, but in the real economy, making things. That means work on in engineering, in geology, in all sorts of real world endeavors that result in more production. Whether it's more production of oil and gas, of minerals, of manufactured goods. I think companies that are involved in that and exporting are going to be the ones that are going to be able to hire people and pay more salaries if, of course, the government gets out of the way. If the government stays in the way, then it's going to keep on destroying opportunities in this country, and you're going to have more and more opportunities in other countries.
Okay. How did you feel about agriculture?
Bullish. I mean, in all sorts of agriculture, not only farming, but in the technology aspects of agribusiness, in ways to make agriculture more productive, to get more yield out of your acreage and things like that. And so, all sorts of sciences related to agriculture are going to do well. There's engineering, there's chemical engineering, there's all kinds of biology involved in trying to find better ways to grow things. But anyway, hey, that's it for this hour. Up next, we've got a guest coming up, James O'Keefe, president of Project Veritas. We'll be talking about what he's working on when we come back in hour 2 of the Peter Schiff Show. So stick around. You're listening to the Peter Schiff Show on SchiffRadio.com. And this is Peter Schiff. Hour 2 of the Peter Schiff Show is underway now. We are still waiting for our guest to come to the phone. Let me see if I can introduce him, and hopefully during the introduction process, he'll manage to show up. It's James O'Keefe. Now, James O'Keefe is a 27-year-old president of Project Veritas, which was founded with the mission statement to investigate and expose corruption, dishonesty, self-dealing, waste, fraud, and other misconduct. Well, a noble goal, and there's certainly a lot of that going on, particularly in Washington. O'Keefe gained a bit of notoriety for his undercover sting videos of Acorn workers helping a purported pimp set up an underground prostitution ring, Planned Parenthood workers violating abortion laws in various states, Medicaid workers in Maine helping unqualified Americans receive benefits. Now, his latest video shows Professor Jeff Keefe, a researcher at the liberal think tank Economic Policy Institute, telling someone on the phone whom he thinks is a union contributor that the EPI will kill a study if EPA's financial backers dislike their results. Now, of course, the Economic Policy Institute, we invited several of their top guys to debate me at UCLA and offered to pay their expenses. Nobody from the Economic Policy Institute accepted my invitation to debate. But anyway, the video is out on YouTube, I suppose, exposing this conversation. I don't know. Anyway, we're still waiting for our guest. He's not on the phone yet, so I guess I'll take a different phone call. Let's try Tyrone calling from Illinois. Tyrone, you're on the show. Tyrone? Is Tyrone there? Maybe not. Let's go to Drew in Minnesota. Drew, you're on the show.
Peter Schiff, good morning, sir.
Good morning.
I'm calling about trying to get my arms around the euro. And I guess as a note, I'm amazed that it's still, maintaining a, the semblance of value right now. But my question is, whatever they decide to do, doesn't that, whether it's recapitalizing the banks, doesn't that, in the end, doesn't that devalue the euro?
Oh, yeah. I mean, the euro is going to lose value, I believe, but just not against the dollar, because it's a moving target. We're devaluing the dollar at the same time the Europeans are devaluing the euro. So the question is, who's going to devalue their currency more, the Europeans or the Americans? I think it's us. I think that our currency is going to lose more value. But look, the gold's up $30 a day today, $30 an ounce today. That shows both the euro and the dollar going down because the euro and the dollar are pretty much flat relative to each other today, but they're both plunging in terms of gold. And, yeah, that's one of the reasons that we have underweighted the euro for years in our own portfolios at Euro Pacific Capital because of the facts that you're pointing out. But I think it's really ridiculous when you watch on television how all the experts are criticizing the Europeans for not doing what we did, for not having, a Henry Paulson bazooka, big bailout TARP plan to rescue the banks, to rescue Greece, as if what we did was good. What we did was bad. And so the fact that Europe is reluctant to repeat our mistakes is a good thing for Europe. The problem is Europe is making its own mistakes. In many cases, they're not as big as ours, but they're still making mistakes.
Look, quick question then. I don't even know if it's possible, if the euro collapses, it no longer exists, what happens with my euro? I got a euro in my pocket, the currency is gone, or it implodes. What then happens?
I have no idea. I mean, it might depend on where your euro is deposited. If your euro is in a German bank, maybe it will come the Deutschmark. If it's in a French bank, maybe it'll become the French franc. What happens to your euro if it's on deposit offshore somewhere? I don't know. I mean, there is no real framework for how we would, get rid of the euro and bring back all the individual currencies that were initially rolled into the euro. I mean, obviously, if you own, for example, a German government bond, if the euro were scrapped and the Deutschmark were to return, you would be paid Deutschmarks because you have an obligation of the German government, which is one of the reasons that if you want to own, government bonds in Europe, you might prefer a German government bond because if there was a collapse in the euro, you would get the new German currency, which would probably be a lot better than to get the new Italian currency. I don't think anybody who owns, bonds wants to get them repriced in Italian lira. But exactly how it would happen, I don't know. But I don't think it's going to happen, at least not in the near term, not in the next several years. I think the consequences, the adverse consequences of trying to completely unwind the euro would be traumatic. And so I think the politicians in Europe are going to do what they can to avoid that from happening.
I have heard that there is talk about eventually there will be a euro and a euro light. There will be effectively two forms of a euro. I'm only an arm.
Yeah, well, that's not going to work because, like, the good euro and the bad euro. Like, who's going to want to own the bad euro? No one's going to want that one. I mean, so it's kind of like, that concept we had before during the TARP. Hey, we'll create a bad bank. Yeah, the problem is who's going to want that bank? So I don't think that works. So, I mean, maybe what might happen is some countries might leave the euro, and then the euro will still be there, but there just won't be as many countries sharing the euro. So the euro might just include Germany, Austria, the Netherlands, maybe France. I mean, a few of these countries, but it won't include Portugal, or it won't include Greece, or maybe it won't include Italy. I don't know. I don't know where or Spain. I don't know where some of these countries are going to fit in. But that's also an option. But I don't think that is the most likely option, at least in the short run. I think they're going to try to keep it together for a while longer. Ultimately, they're probably not going to succeed. But they may succeed long enough to put the currency, to put the dollar back on the currency front burner rather than the euro.
Okay. Hey, thank you very much, Peter. Enjoy your day, sir.
Hey, thanks for calling. Apparently, I don't know, our guest doesn't. I don't know if we still have our guest. We're still waiting, so I'll continue to take phone calls. Well, actually, now we got a commercial break, so we're going to be in a commercial. We'll be right back. Either we're going to have our guest, James O'Keefe, on the line, or we'll continue taking phone calls. We'll see what happens. This is Peter Schiff here at SchiffRadio.com. This is Peter Schiff at SchiffRadio.com. Going back to the phones, next up is going to be Mick calling from Tokyo, Japan, the home of the rising Japanese yen, now at a new record high against the U.S. dollar. Mick, welcome to the show.
Yeah, hi, Peter. I must admit, I love the yen.
Yeah, of course, when they do the news tonight in Japan, they'll be talking about, oh my gosh, no, the yen is in trouble. We have to save the yen. And of course, they're talking about we have to save it from going up. We have to save it from appreciating. I mean, it's very Orwellian, where they feel that they have to defend their currency from going up.
I reckon that's just a political ploy for what people want to hear. But I think behind closed doors, they're actually giving the old "you beauty." That's great because with the state of Japan at the moment, they basically have to import a lot of stuff to get things back on track after, as you all know, the disasters happened here. And so obviously, the stronger the yen is, the cheaper everything is they import. So I think politically, one way they say something, but behind closed doors, I think they're quite happy.
Well, that's what I said the minute we had the earthquake in Japan tried to weaken the yen. My point is why they need a strong yen. In order to purchase a lot of imports. But maybe what happened was they weakened the yen temporarily so that foreigners could repatriate their overseas dollars and get more yen by getting a better exchange rate. And now that they've moved some of the repatriation and they've moved some of their money from to yen, now they're going to let the value of the yen go up so that they could use the yen to buy a lot of cheaper raw materials to help rebuild.
But there's a few opinions on that. But what I was actually calling about was the way, I just get back to government all the time and the government regulations and the amount of people that work in government. And there's no one that really audits the government. We never hear about how efficient the government is. No, for example, you're looking at the question of you need consumers. You need people to buy products, or what comes first? Does the producer come first, or does the consumer come first? Okay. Now, government regulations restricts the ability to do business, and in my case, I'm in the car industry in Japan. Regulations, it's a pain in the rear end in terms of trying to do business. So, the more regulations there are, it inhibits the ability or the incentive to do business. Now, if you take a look at, for example, right now, look at Libya. Now, if you've got a country like that, right now, what it needs is more. It needs capital, people to take the risk. If you don't have those people producing the products, there's no way consumers are going to buy it. There's nothing there to buy. You need people making products. So now, right now, if you could imagine the amount of government, imagine in Libya now, the government regulates, no, you can't do that because of that and that. The business don't want to make anything, so you're not going to have any consumers buying things. So every time I hear that people are saying we we got to. The government is not the problem. It really irks me. I just can't understand how people cannot understand to get out the way of business. They don't even do business.
They don't. Remember, that's the attitude when I was speaking to a lot of the younger protesters at Occupy Wall Street. You know, they don't understand. They go, you know, we need the corporations to pay their fair share, to help the economy grow, to provide jobs, as if all that comes from the money they pay in taxes. They don't understand that it's the money they don't pay in taxes. That's where all the jobs are coming from. That's where the growth is coming from. The very fact that they're pursuing a profit and generating a profit means that they're creating a lot of products that we want at prices we can afford. They're creating jobs. And the fact of the matter is, if you look at some of the wealthiest Americans, I think they're underpaid. I mean, forget about the hedge fund guys who've got special tax breaks, but you talk about somebody who starts a business, an entrepreneur, no tax benefits, no special breaks, just earns his money the old-fashioned way. He's underpaid. I mean, chances are, even if he's making millions of dollars a year, the amount of benefit that society gets from his hard work, that he's actually underpaid. He's not being paid enough, given how much everybody else benefits. And that's the truth. Even if you get really rich, right? Let's say a guy like a Henry Ford who got really rich making cars, the fact of the matter is society benefited far more than Henry Ford. Maybe Henry Ford benefited more than any other single individual from his work, but collectively, everybody else benefited far more from the profits that Henry Ford was able to generate than Henry Ford did personally.
Yeah. I think a good example, if you want to really explain it to someone in layman's terms of how a free economy would work and what a lot of people can relate to, is sport. And one of those sports is, for example, say soccer, where you've got, one umpire on the field and two people running up and down the line. If you represent the government as the umpire, right now I think you'd have 30 referees or 40 referees on the field, and people playing soccer, they'd all just hit each other. Nothing gets done. That's exactly what's happening in business today. Nothing gets done because they're in the way. I can't do anything. I'm restricted to the amount of cars I sell due to the amount of regulations.
You know, it's probably worse than that. Basically, think about it this way. The government's gone from the referee to playing on your opponent's team. And instead of one referee, you know, your opponent's got all these refs that are on their team. And so now it's impossible. It's not like we didn't level the playing field. We stacked it against the businessman who's now playing against the government, as opposed to having the government trying to referee the game. But, hey, thanks for calling it. I know you've called in a few times. There can't be that many Aussies calling me from Japan. But thanks for listening and for your comments. Next up, closer to home, is Joe on the phone from New Jersey. Joe, welcome to the show.
Hi, Peter. Hi, Peter. Can you hear me good?
I can.
Okay, that's great. Okay, I have questions about the market by the influence of the meeting that Europe is having. I want to know what your take on how it's going to that meeting, how it's going to affect our market and the bonds in the market.
Well, a lot of it depends on what they decide. I don't know what they're going to decide. I still think that they're going to do things that are not ideal, but I don't think they're going to make as big a mistake as a lot of people think they're going to make. I think the euro is going to rise against the dollar. I mean, that's my feeling on it. Now, of course, today the markets are very weak. In fact, the Dow rally fizzled out. At one point during the show, the Dow was only down about 50 points. It's now down near the lows of the day, down 132. Gold, on the other hand, has extended its gains. Gold is now up better than $30 an ounce, and the gold stocks are making new highs on the day, so we are getting a little bit of a decoupling. The oil market is still very strong, up better than $2 a barrel, despite the weakness in the stock market, which shows just how strong this oil rally is. The yen continues, it's holding on to its gains, but other currencies are coming back. Actually, the euro was almost back to unch, and now it's falling back to about 138.30. So the dollar is not gaining a lot of strength today. It's losing ground against the yen, but we'll see what happens. I mean, I think they're still meeting. They haven't come out with anything concrete yet.
Mm-hmm. But they did mention about cutting the values of the euro bond. Does it mean there will be some investors, will feed to the U.S. bond market, so it may cause.
Well, what they're talking about is a haircut on the Greek debt, which of course is what we need to do. Meaning that if you own Greek bonds, you're not going to get back 100 euros on 100 cents on the euro. You're going to get back maybe 50% of the face value of that bond. That's what has to happen. I mean, we have to force the people who bought those bonds to take a loss. And we have to lighten the debt burden on the Greek economy because the Greeks simply have borrowed too much money. Now, why was it that the Greeks were able to borrow too much money? It's because interest rates were too low. It's because there was too much confidence in the Greek government because of the idea of the euro. And maybe there was a moral hazard there. Maybe there was an idea that, hey, the eurozone won't let anybody fail. Greece is too big to fail. The eurozone needs to throw water on that idea. No country is too big to fail. That way the creditors will be reluctant to loan an overly indebted government too much money. And, of course, that includes America, where we've already borrowed more money than we can possibly repay. People are going to start to worry about. Right now, they're not worried because they say we have a printing press. Well, pretty soon, that's the reason they're going to worry, because we do have a printing press and because we will use it. Anyway, we'll be back. We got a commercial. We'll be right back here on the Peter Schiff Show at SchiffRadio.com. So, this is Peter Schiff here at SchiffRadio.com. We are back. I don't know. I guess we don't know what happened to our guest. We're probably not going to have him on the show, but we'll just continue on. I'm looking at some good sound from Steve Wynn, who was on Fox with Neil Cavuto the other day. Steve Wynn also had some great quotes about how it's easier to do business in China than the United States. And he has been a Democrat. He has been a big supporter of Democratic Senator Harry Reid in Nevada. Now, of course, a lot of that might be because there's a lot of clout there. The government is very involved in the gaming industry. He wants, Steve Wynn is big in gaming, and it helps to have friends in high places, and so you support the incumbent. I'm not sure how much of Wynn's support for Harry Reid is because of what Harry Reid is in a position to do for him as a casino owner, or if he ideologically really, thought that that he was the best candidate. But he had some really great stuff to say about Obama administration and how much it is damaging our economy, particularly with regard to health care costs. Let's take a listen. Here's cut number 18.
I know you've been a big supporter and backer and confidant of Harry Reid, the prominent Democratic senator from Nevada, just squeaked by with the re-election, and he endorsed this health care plan, led the charge in the Senate for the president. Were these costs escalating even prior to health care coming, or did they just get out of control since health care came?
They were escalating before at a rate of about 8% a year, and the devastation of Obamacare we estimate to be north of 12%. That increased that is to say the rate of escalation of healthcare costs has increased by 50% because of what they did.
So here you have Stephen Wynn, who operates, Wynn Resorts. A lot of people are getting health care through his company, so he's got a front row seat at what's happening to health care costs. And according to Stephen Wynn, health care costs are rising 50% faster under Obama than they did under Bush. That's a pretty startling increase. Where is the outrage? Why is it Obama, trying to do something to undo the damage that he's already created? Because if he thought health care was a problem before he was elected, it's obviously a much bigger problem since he's been elected. Anyway, here's a little bit more from Steve Wynn, cut number 19.
The policies of this administration have destroyed the living standard of the working class in America. What is ostensibly the base of the Democratic Party is taking the worst hit in history because of these unbelievably uninformed policies of this president and his colleagues who have fostered this ridiculous class warfare, these nonsensical policies that have been proven to be ineffective and unsuccessful everywhere they've ever been tried in the world.
And, of course, the strategy of the Democrats is, as they're impoverishing their base, the base is blaming capitalism. They're blaming the Bush tax cuts or Wall Street for their bad condition, and so it makes them more likely to want to vote the Democrats in. They don't understand that it's because of these big government policies that their lives are so difficult, that the economy is so weak. And if they simply vote for more of the people that are undermining their standard of living, it's going to fall even faster. But so few people are able to connect the dots between these destructive policies and how bad the economy is. And one thing I disagree with Stephen Wynn is it's not just Obama, that a lot of these policies began long before Obama took office. A lot of Republicans have supported some of these policies. The difference is Obama is just upping the ante. He's raising it to a whole new level. Let's play this final short cut from Steve Wynn. It's cut number 20. Or 20.
It's almost impossible to believe that they don't know that what they're doing is destructive, but they do it anyway. And frankly, Neil, I don't understand that. My friend Harry Reid hung up on me the other day for the first time in 40 years. That's what it's come to.
Yeah, well, I wonder if he's going to support Harry Reid, although he just got reelected, so who knows if he's actually going to run again. He's got a new 6-year term. I think, right, he just won the election in 2010. And he almost lost. Was it Michelle Angle? I think, was that her name? I know he had a Tea Party Republican that he ran against, and he slightly edged her out. But I know that Steve Wynn did support his friend Harry Reid the last time around. I'm sure maybe he's starting to regret some of that support. But anyway, let me go back to the phones. Next up is Craig calling from is it Maryland? Craig, you're on the phone.
Yes, sir. I was wondering if you could tell me what a stock price is. It's presented in the media that there's a lot of buying going on when the market goes up and selling going on when the market goes down. But I was taught back in the 80s that the stock price is the last transaction price.
Well, the price of a stock is, that's in each all stocks, have their own price. It's not one, but the price is just if you want to buy a stock, how much you have to pay to buy it. And if you want to sell the stock, how much you're going to get if you sell it. I mean, that's the price of the stock because stocks are for sale. And everything that's for sale has a price. And the stock price, of course, changes every day, every minute, depending on, the relative abundance of buyers or sellers, how motivated the buyers or sellers are. If people really want to buy and, they want to buy right away, the price is going to go up. If people desperately want to sell, the price is going to go down. But, what I often talk about a stock price is it really doesn't confer any information about whether the company is a good investment or a bad investment. You don't know. A lot of people look at the price of the stock and they think, well, if a stock is $10 a share, that seems pretty cheap. If it's $100 a share, well, that seems kind of expensive. But you don't know. I mean, a $10 share could be expensive. $100 could be cheap. It all depends on what you're relating the price to. So you can always, whenever you think of a stock price, you've got to think of the total number of shares outstanding to know what the market cap of the company is. But then you've got to relate that price to something else, whether it's sales, whether it's earnings, whether it's book value, so that you can determine whether or not that price, that share price, represents a good investment, whether or not you're getting a good deal or whether or not you're overpaying.
Right, that would be the perception of us as investors. But how is the company affected by the stock price? Haven't they already issued the stock? And
the company is affected by the stock price in that if the company wants to issue new shares, if the company wants to do a secondary offering to help finance the growth, then a high share price helps. If the company wants to acquire another company and it wants to pay for that acquisition by issuing shares, a higher share price will help them acquire other companies with issuing fewer shares. And, of course, the shareholders like a high share price. If you bought stock in a company, you want the stock price to go up. And if management is not running the company in a way to increase the share price, well, there may be a lot of pressure to change the management team. But, yes, directly, just because the stock price goes up or down, it doesn't immediately affect the intrinsic real value of that company. But ultimately, a rising share price is going to benefit a company, and a rising share price should be indicative of the fact that the company is creating value, that it's earning money, that it's growing its shares, that its book value is going up, and all of that ultimately should be reflected in the share price.
If it's being fairly traded.
Well, yeah, look, if the stock price just goes way up, it's clearly overvalued, it might make sense for the company to sell stock. And, if it has treasury stock to sell, it can sell stock and bring cash into the company that it could use for other purposes. But, what I don't like is when these companies give out a bunch of stock options to their executives, and then they take actions to temporarily boost the price of the stock just long enough to let their executives cash out, and the long-term investors are left holding the bag. So a lot of times people think that, executive stock options align the interests of shareholders with management. Sometimes they don't. I mean, sometimes they make their interest exactly the opposite, because the shareholder wants solid long-term growth, not just a quick spike and then a collapse. A big spike up only helps you if you're a seller. It doesn't help you if you're buying the stock to hold it for the long run. And, of course, that's what happened with a lot of these, companies where the executives were able to, cash out with windfalls while the long-term investors were stuck holding the bag.
Thank you, sir.
Yeah, that's why it's important to look for dividends. Look for companies that pay dividends, because that means that you are getting paid as an owner of the company, rather than the company simply using all of its revenues to reward the employees, or in particular the executives. Rather than doing that, you want to make sure that the executives know who owns the company, and that's the shareholders, and that the shareholders get paid too in the form of a dividend, and not some puny little trivial dividend, but a real dividend. I mean, something solid that really returns something to the shareholders. Because remember, if you're buying a stock and you're not getting a dividend, you're not an investor. You're just a speculator, right? You're just speculating that the price of the stock goes up. But what if the price doesn't go up? What if it goes down? But if you buy a stock with a good, solid, high dividend, it doesn't matter if the stock price goes up, because you got a dividend. And that's what's supposed to happen. Remember, bonds pay interest, real estate pays rents, stock pays dividends. If you're buying a stock without a dividend, it's like buying land without a tenant, without rent. Doesn't mean you can't speculate in land. There are plenty of land speculators who make money buying and selling land, but that's different from investing, from owning a piece of property and collecting income. So when you're in the stock market, in general, you don't want to just be a speculator. You want to be an investor, and you want to get paid. Anyway, looking at the markets, too, we're still down about 116 points, but gold is making new highs as we speak. GLD is now up almost $40 an ounce, the equivalent of $3.3760. Gold stocks are also making new highs. Crude still holding on to better than a $20 gain. So a very big move today in oil and gold, with a down move in the stock market, which is a little bit contrary to the pattern that we've had for the last couple of weeks. Doesn't bode well for the market or the economy. Anyway, we'll be right back with a final segment. This is Peter Schiff at SchiffRadio.com. This is Peter Schiff. We're back for the last segment of the Peter Schiff Show. I want to play a little sound here. This is from this MSNBC. It's hold on, I'm losing where I was. All right, we've got there's some problems in my numbering here because they numbered them wrong. No, wait a minute. 15. All right, now this is from Lawrence O'Donnell's show on Friday. And here we have Robert Reich is on with Lawrence O'Donnell, trying to explain why the flat tax is a fraud. Of course, the fraud is Robert Reich, but I'm going to play the initial cut of why he believes flat tax are a fraud. It's cut number 15.
Well, they are all fraudulent. I mean, the flat tax is a fraud. Let's be very clear about this on two grounds. One ground you've already talked about, Lawrence, and that is that inevitably there are going to be exemptions and there are going to be deductions just simply because life is complicated and people are complicated, businesses are complicated, and to get fairness, you're going to have them.
Well, first of all, the deductions, the exemptions have nothing to do with the fact that life is complicated. They have to do with the fact that there are special interests like the real estate industry that have powerful lobbyists that want to at least have some type of deductions. But it's still a flat tax. Even if you have a 20% flat tax, even if it has some deductions, it's still flat. Everybody pays the same rate. It's just a flat tax with some deductions. It doesn't mean it's not flat. Now, of course, I would prefer that the flat tax not have the deductions. So, in other words, if you're going to have a 20% flat tax, let's say, that preserves the mortgage interest deduction, I would rather have a 18% flat tax that gets rid of that deduction if that's the level that makes it revenue neutral. But because I think the idea is to have the lowest tax as possible. But obviously, you've got a real estate industry that's going to lobby to try to keep a break. But the reality is, the minute you have a flat tax, you reduce the value of the mortgage interest deduction. Because if you take the top rate from 35% to 20%, well, now when you deduct your mortgage interest from your taxes, it has a smaller effect because your overtax rate is lower. So we're going to reduce the significance of the deduction either way. But just because you have some deductions in a flat tax doesn't mean it's not a flat tax. It's just not as ideal a flat tax as you would have if you didn't have those types of deductions. But anyway, here is a little bit more from him in cut number 16.
Secondly, because if you have a flat tax, you are inevitably going to reduce the taxes of people at the top, who in a progressive tax system are supposed to pay a little bit more, and you're going to increase the taxes of people at the bottom, who either pay no tax now or pay a very little tax or get some sort of exemption. No, they would be paying 9% or whatever the flat tax rate is. And this is known.
So he objects to a flat tax because he wants to make sure that the top pay a little bit more. Well, a flat tax means they pay a little bit more. In fact, they pay a lot more. Even though it's the same rate, they're paying that rate on a much higher income. So under a 20% tax flat tax, if somebody earns $1 million, they're paying $200,000 in taxes. If somebody only earns $100,000, they're only paying $20,000 in taxes. So I think if somebody is paying 10 times as much tax as somebody else, wouldn't you at least say that that counts as paying a little bit more? See, what he does, Robert Reich doesn't want the rich to pay a little bit more. He wants them to pay a lot more. He wants them to pay massively more. Why doesn't he say that? Why doesn't he say, we want to really sock it to the rich. We want to soak the rich. He always makes it sound like he just wants them to pay, just a little tiny bit more. That's nonsense. They already pay a lot more under a flat tax. What we have now is ridiculous. We're basically, running them through over the coals. You have a lot of people under the current system who pay no taxes whatsoever, and then you have people that pay massive taxes. Now, also, I want to talk a little bit about President Obama's plan now to help people who owe a lot more on their mortgages repay, refinance to get lower rates. I have some sound clips, but I'm not even sure if I'm going to have time to play them, given that we only have a few minutes left. So I just want to address this topic, because what he wants to do is let people refinance if the value of their property is as much as 25% below what they owe. And he used an example, one of his speeches, like, what if you owe $400,000 and your house is only worth $300,000? Well, why would you even want to refinance? I just move out. There's plenty of houses you can rent in Las Vegas that would be where the rent would be cheaper than what the mortgage payment would be on the house. It is a bad decision to even try to refinance that house. They'd be better off if they just moved. But he is trying to market this as a benefit to the economy, because what he's saying is if we can refinance all these mortgages, then the people are going to be able to pay less in their mortgage payment than they're paying now. Now, of course, that's obviously true if we refinance all these mortgages, but how is that a benefit to the economy? Because there's somebody who is going to be earning less. If the homeowner is paying less in the mortgage, then the bank, by definition, is earning less on that very mortgage that it owns. So what happens is we're going to further impair the balance sheets of the banks and our other financial institutions that are already on shaky ground, based on the fact that now we're going to refinance everybody's mortgage into a lower rate. And, of course, what's going to happen is, in order to make it possible for the people to refinance, the government is basically going to tell somebody that if you refinance a mortgage, because obviously nobody's going to want a mortgage that has no collateral and that's underwater, right? If they're going to try to shop around and go from banks. Right now, nobody wants one of these mortgages. So the government is going to say, no, we're going to guarantee the mortgage, even if it's a brand new bank that extends the credit and accepts as collateral a house that is substantially less than the value of the loan. This, again, is increasing the moral hazard and putting more risk, because ultimately these loans eventually get defaulted on because there is no equity in the property. There's going to be defaults, and the taxpayer's on the hook. But in the meantime, the taxpayer is already on the hook, because when the bank income declines, because they were getting 6% on a mortgage and now they're only getting 4%, they're getting a lot less income from the people who are paying their mortgages, and they don't have that income now to offset all the people who have simply stopped paying their mortgages. And, of course, the people who have decided to stop making their mortgage payments, they're not going to care if they can refinance at a lower rate. They've already got a rate of 0 right now because they're paying nothing. In fact, I think most people, if your mortgage is, 25, 30, 40, 50% more than your property is worth, you'd be a fool to make a mortgage payment. Oh, I mean, you would just live there rent-free. Like somebody we spoke about on the show earlier, someone called in, their friend had lived in their apartment or their house for 4 years, hadn't made a single payment. All these government gimmicks are going to backfire. They're going to weaken the housing market. They're going to weaken the economy. It doesn't matter what President Obama says. Anyway, that's it for today. We'll be back tomorrow for another 2 hours of the Peter Schiff Show here on SchiffRadio.com, the gold standard in talk radio.